Hello traders, welcome to your daily market update for Tuesday the 28th of April 2015, and overnight we've seen the market move purely on the back of the US dollar, and we've seen some dollar weakness. That is due to the PMI data coming in weaker than expected. It's just another nail in the coffin hurting the US dollar at the moment. We're seeing a string of weak data, and with that, along with the fact that the FMOC minutes are coming up later in the week, and the market's really focusing on, they're worried that the Fed could delay further or talk down the talks associated around raising rates this year and pushing it back later. And I think September right now would be the most likely scenario. But the market could actually be disappointed with the Fed confirming that it's more likely to be pushed back that late. So even though I think realistically the market is expecting that, I think that there is possible for further downside. But coming up tonight, we do have the confidence index, and I think that will surprise and improve as suggested, and that's just due to the business investment report, the Michigan report have all been good, plus the Apple's report card for the quarter has come out, and it's been much better than expected, all leading people into potentially greater consumer confidence around the business sector. So that could potentially add a little bit of support, but whether it's enough to stabilise the falls in the US dollars yet to be seen, and that's what I'll be focusing on in terms of the US dollar. The Great British Pound has had a cracking run. It's really accelerated up, and we've seen 10 days out of 11 rally. Now, it hasn't done that since May 2012. And I think that this is just due to the fact that the US dollar has been weak. Plus, there's also been reports of the election deadlock sliding towards Labor. So I think that the deadlock risks were actually starting to get priced out. Plus, also, we have to remember that the UK government did mention recently that the next interest rate move will be higher. Even though they did basically rule out it will be this year, they just confirmed that they're not looking to do any policy easing in the near term, that's for sure. We have Q1 GDP coming out, and everybody will be focused on that for the pound, and that will probably dictate the direction for the pound in the near term. Now, if it is weak, I think that we could see the pound start a pullback leading into the election. So we need to keep an eye on that, but technically it's very strong, and we'll have to we'll look at that in a minute. Following on, we do have some New Zealand data. Everybody will be watching this New Zealand trade data, as I mentioned yesterday, so we'll keep an eye on that. The euro rallied, and that's just purely on the back of the US dollar weakness, but also there has been a reshuffle of the debt team. So the debt team was perceived that they were wasting time, quote unquote, from IMF officials, plus the head of the team was actually accused of being quite blunt and hard-nosed tactics in terms of trying to get a deal across the table, and that was creating issues. So with this change, it's excited investors, and that's put people back into the euro a little bit, and they all believe that this may result in an acceleration of the debt talks, which up until date have been really pointless, back and forth, and there's been no progress. So there's a little bit of optimism there, and that's what the markets are focusing on. So we do have a little bit coming around today, and each of the data sessions are actually quite important. So keep an eye on those, and I think it will start to deliver some price action. If we have a look at the US dollar, we are still above that major support level, but we've had another weak day, and as I said, we are trading below the 50-day moving average, and I think that we could continue to see some weakness, especially if we see the FMOC minutes creating some negativity, and I think that that could be the straw that breaks the camel's back and takes out this major support level. So we'll have to keep an eye on that, but for tonight we could see some positive sentiment coming out of the US. Just hold up support for now, and we'll have to turn our eyes to the FMOC minutes later in the week. If we go to the charts, we'll have a look at the New Zealand dollar, and just purely on the back of US dollar weakness, we did have a fairly bullish day. We are trading with inside this rising wedge, and we've started off a little bit softer than expected this morning. However, I think it's all still in the court of the US dollar, and that is until we see trade balance coming out tomorrow. So that'll be quite interesting, and there will be some price action around that trade balance. Trade balance will also affect the Australian dollar, but as you can see here, we've had quite a bullish run, and we're making our way up to the 79-cent range, and that is the major whole round number and resistance level. As you can see, we have a spike that went above by 35 pips, and we need to keep that in mind. But I think for now, the US dollar, if the weakness continues, I think we could see it break through that, and away we go. However, the trade balance figures will also affect the Aussie dollar, so if they come in really positive, we could see a further boost. The European dollar, as I mentioned, did have a positive day, not overly so, but it was on the back of the US dollar weakness and a little bit associated with the reshuffling of the debt team. Now, we are still trading below the major resistance level of $1.10.3, and I think that if we do continue to get some US dollar weakness, we could come up and test that, but to break above that is going to be something quite special. So I'll have to wait and see what happens in the short term. For now, the trend and the bullish moves are still in play. The Great British Pound has broken through the 50-day moving average that I was quite interested in seeing. And that was, if I go to a shorter time frame, that was after the market pulled back and tested the back of the historical downtrend line. So it broke above it, tested the back of it and bounced off it. For now, the bulls are definitely in play, and I think after a move like that, it's quite strong. It's going to be interesting to see what happens tonight, especially with the GDP figures. If the GDP figures do come in weak, this could be the initiator of a pullback and trading back below the 50-day moving average and breaking through maybe a support level. But we'll have to keep that in mind. But for now, everything's in control of the bulls. The US dollar versus the Canadian, it's just all pressure is on, and that's due to the US dollar. Oil didn't really rally a great deal, but I think that for now we are going to continue to see the bearish nature in the US dollar. But we'll have a wait and see what the data comes out tonight, leading into the FMOC minutes. The US dollar versus the Japanese yen, it's still consolidating. It's quite painful to talk about this every day, as it hasn't really moved outside this very tight range of 100 pips really. So we're trading between $1.19 and $1.20, and you just need to keep that in mind when you're trading. Don't try and trend trade this in any great detail. As you can see here on the 4-hourly chart, it is pretty much sideways. So a lot of scalping opportunities, and keep an eye on the US dollar and the bond market, as that is really controlling the US dollar versus the Japanese yen. Well, that's it from me today. I'll be back again tomorrow, and you only have 24 hours to sign up to trade with me throughout the period of May. And if you haven't done so and you miss out, I just want to give everybody fair warning and make sure everybody's notified. So until tomorrow, trade well.